All right, everyone, welcome back to another weekly Roundup edition of On the Margin. I'm joined, as always, by my cheery co-host for Sunrise Saturday, Mr. Mark Yusko. Mark,
there you
welcome back
go.
to the
There
show.
you go. And I'm actually the casual. I'm cashed out. I got my diversified portfolio shirt. We'll do a quick sock review. I got my cruddy jeans on. I do have the Bitcoin bull market socks on today. So the Bitcoin bull is out, feeling good. But I'm cashed out because today is our habitat build day at Morgan Creek. So we all head out and pick up the hammers and saws and do a little construction project, and then we have a little team lunch. So pretty excited about that.
Good for you. Nice. What are you building?
We work on a Habitat for Humanity house.
Nice.
So, and if I weren't in this business, that's what I would do. I worked construction in college. I love it. I mean, I just love putting stuff up and building stuff. And, but when I was working construction in college, and Friday would come around and the foreman and the other guy, the highlight of their week was they'd buy a case of Pearl Light and sit on the porch of the construction trailer and watch the storms in the distance. I'm like, okay, maybe that's not where I want to be, but they love their life, so I shouldn't say anything negative about it.
See, this is the one. Usually, I feel like you and I are brothers from another mother, but this is I could never do construction. I have the back of a 95-year-old man as a 20-something-year-old fella, but
I'm actually not bad with a hammer and saw. So
see, I feel like I would take down more than I would actually help. But I'd love to get your thoughts here. Maybe we could just zoom out a little bit today. So haven't been plugging in quite as much in the sort of macro TradFi side of things, but I popped my head in and was listening to a debate the other day, just kind of on this whole: is this a bear market rally that we're seeing in the S&P and the Nasdaq or the major stock market indices in the US, or is this just the beginning of another longer dip?
Yep. So let's just be honest, Michael. You're following the December calendar that I saw the other day. Mm-hmm. It showed first week of December, pretend to work. Second and third week of December, actually admit that you're not going to work. Weekends, pretend that you're shopping. December 24th, actually go shopping. December 31st, make all the New Year's resolutions that you'll break. And I'm like, that's pretty much how December goes. Nobody works. It's crazy. No. I mean, you're working really hard. But look, I think what's really interesting, the Dow is down 7%. Right? That's not, that's pretty darn close back to black. And, if Santa Claus shows up, which, they're trying really hard to get this Santa Claus rally going, article yesterday in the Wall Street Journal talking about, for sure there's going to be a monster rally in January because the tax loss selling is going to be big this year. That means all the stuff's going to rally in January. Now, remember that the tax loss selling already happened for the bulk of the money. Right? October 31st is the deadline for mutual funds. And that's why we always have this kind of November-ish rally, mid-November to end of November, because people sell the losers. They have to wait 30 days to avoid wash sale. And then they buy back all this garbage. And you saw just garbage, right? I think Carvana was up 30. We talked about this a couple weeks ago. Carvana was up 30% one day on a Friday. Well, now it's right back down. It's going to zero, right? Carvana equity is toast. But that's a long-winded way of saying clearly we're still in a bear market. You don't have 3%, 4% up days in bull markets. They just don't happen. Bull markets are markets go up most days and down sharply on bad news or perceived bad news. We have exactly the opposite. The market goes down most days, goes up sharply on good news or perceived good news. And most of what people are saying is good news. Well, the Fed might only raise 50 basis points instead of 75. That's good news. If you looked at any of the economic data,
it's bad.
It's bad. Like worst ever bad. There's a whole bunch of things. Home sale transactions, freight cost increases are actually negative, decreases. Things that we've just never seen. And all the charts look the same, right? They kind of have this little bump in March of 2020, and then they have this massive spike, and now they have this massive spike down. But the down is farther down than the up. And the base effect, okay, I get it, right? We talked about this with oil, right? If you make oil prices go negative and then they go up on a percentage basis, that's a really big increase. But now oil prices are lower than they were a year ago. That's deflation, right? Not inflation. And so all of this fear of inflation, fear of overheating economy, no way. And actually interest rates are starting to go. So, I don't have the exact numbers in front of me. I could pull it up. But my guess is that TLT, the long bond, after just getting massacred, is probably in the last month up significantly more than stocks.
Yeah, TLT. Let's see, it's not loading for me right now, but it looks like it's about flat, at least on the month. Which is, I mean, it's an interesting point. I mean, do you think
TLT is up 16% last
16%? Oh, geez.
Yeah.
I was looking at the wrong thing.
Yeah. So, I mean, and that's like straight up, but it did that because it went straight down. I mean, that's the worst. Look, this is the worst year for bonds in the history of bonds. Like awful, terrible, horrible, like the Grinch. I mean, I'm, watched the Grinch last night and, terrible, awful idea or whatever he says. But
that's a great movie.
Oh, so good. And I watched them back to back. I watched the new one and the old one. I skipped the Jim Carrey one. I don't like the Jim Carrey one.
Oh, really? But I still like Jim Carrey from my childhood. I've got a soft spot for Jim Carrey, Bruce Almighty. Yeah, the Mask.
All right, I will watch it.
I appreciate that
because I have, and then I'd complete the trifecta.
Yeah. So what do you think? I think, look, we're recording this on December 9th. I think if at the beginning of this year, someone had said, hey, Mark and Mike, the Fed is going to be raising 75 basis points at each FOMC. We'll taper off to 50 basis points by the end of the year. Where do you think the stock market is going to be? And where do you think people's heads are going to be at? I would not have said here. And I think it's pretty fair to say that the market is surprised to the upside in terms of resilience. So what do you attribute?
Market? Yeah. Tech is where we would expect it to be. Tech is down. I mean, NASDAQ's down 30%, 29.77%.
Yeah.
But you're right. The broad market, particularly the Dow, and for some reason I can't get the S&P to load, which I think is kind of in the middle, in the teens. But I agree with you 100%. And remember, the Dow was down mid-20s and then has just had this monster rally off the bottom.
Yeah.
But yeah, you're right. If you think about the types of companies that have done well, it's all about this recovery, this expected, good outcome. I just don't see it. I mean, other than travel, right? Travel is still crazy. And someone explained it to me, maybe it was Joseph last week explained it to me, that it has to do with, we gave out all these stimmy checks and the rich people couldn't spend them because you weren't allowed to go anywhere. So now they're going. And I may have talked about this last week, but, we're going skiing over Christmas. We do that, pretty frequently. And we decided this year we'll go to Utah, where my wife's cousin lives, instead of Colorado, where I like to go. And long story short, we'll just get a hotel. And I pull up. There are no hotels except these 3 resorts. And the price was $3,400 a night. I'm like, $3,400 like for a week? No, per night. And there's people that are paying that. Not me. So I'm staying in a crappy little Airbnb. I'll have to take a bus to get to the slope, but
slumming it. Let me ask you this, Ryan. Can you talk about some of the headwinds that are there for technology stocks? And just I think yesterday, Salesforce actually announced that they were going to cancel guidance moving into the new year, which is
well, you had Mr. Hunt, on the show, not this show, but on a show maybe this week or last week.
Yeah, this week.
This week, and you know, he and I don't always see eye to eye, I guess. But bottom line is, and if two people always have the same opinion, one is unnecessary, so that's fine. But long story short, there's one thing and I don't watch much of his stuff, but I did watch the thing he did where he talked about Salesforce versus IBM and how narratives work. And it was amazing, right? Over this 11-year period that this woman was the head of IBM stock, no movement, right? None. Salesforce was up like 10x.
Yep.
And basically explained it was because every quarter, the day after earnings, Benioff would go on TV and spew nonsense. I mean, literally nonsense, talking about adjusted EBITDA and community stuff and all this literally made up stuff. But people were like, oh, this is such a great growth story. And when you actually look at the numbers between IBM and Salesforce, they're not that different. But one went up 10 times and one was 5 because the woman at IBM went on TV 0 times.
Yeah.
0 times. And the reason he's not going to do guidance is because he has no clothes, right? He is the emperor who has no clothes. There's no there. This stock could go down a lot more. I mean, how much is it down this year? It's down a lot.
Yeah, it's down an enormous amount. I thought this was pretty telling here. So first of all, this is actually, they break this out. This is sort of a helpful visualization. Basically, this is a very helpful way to break out, sort of revenues and costs, and you get a sense of profitability and nice little visual representation here. And you can look at the net. What I want to call your attention to is the sales and marketing red part of this little graphic versus the net profit part of the graphic here. So sales and marketing as a percentage of revenue is 44%. 44% of revenue, and net profit it's 1% more. It's $68 million versus $68 million of net profit versus $3.4 billion spent on sales and marketing. There's some part of me that investors are obsessed with this idea of SaaS and subscription revenue gets valued X because there's no incremental cost to produce it and you can just ship it into infinity. But where you see it in a P&L is sales and marketing. That's where you get that incremental cost, right? Because you're competing with every other software provider who also doesn't have that.
Well, so then the part that isn't, I mean, it is on here, but I can't really see it, but because I got old eyes. But is this nonsense of stock-based compensation that somehow the law allows these companies to turn an expense into revenue.
Can you explain that? How that actually, I don't understand how
Michael,
that works.
I actually can't explain it other than they literally allow the company to invert this. It is clearly an expense, right? If I pay you in stock, okay, that is coming out of my kitty, right? I'm giving you, but because it's, I don't know if it's because it's deferred in these option programs. I actually, I have a major in accounting, but that was 100 years ago. But I actually can't explain it. But I do know that it was a rule change that happened, some number of years ago. And because of it, all these, SaaS type companies and all these tech companies, they just went straight up and got bigger multiples. I mean, still, you have a bunch of these software companies like the ones I love to pick on, MongoDB and Cloudera. I mean, these things still sell it at like 20 times revenues. That's insane. They should go down 75% from here, and they're already down 75%. Salesforce is down 50%, and it's just getting warmed up. And that's why he's not going to give you guidance, because this is literally pull back the curtain, and the Wizard of Oz ain't so wonderful.
Yeah, no, it's not. I have a something I'd like to run by you. Do you remember there was a period of time, probably back in 2021 or something like that, when we weren't really opened up back from COVID, but the stock market was screaming along, and everyone was sort of wondering, why is the stock market doing so well when it seems like the economy is just either frozen or in the crapper? And obviously, there's the monetary stimulus. explanation that people would attribute. But also, I think people rightly pointed out, they said, hey, take a look at what makes up the indices, right? Look at the top 5 names in the S&P and the NASDAQ. These are all technology stocks.
Yep.
So I'm wondering almost if there could be some sort of reverse effect here, which is when interest rates rise, those are the ones that are extremely highly valued, very sensitive to interest rate rises.
Yes.
There almost could be some sort of rotation underneath the hood where tech stocks are facing these incredible headwinds, right? But actually more traditional sort of value stocks actually sort of see their day, and we don't see as much pain in the overall index. Do you see a possibility of that happening?
Oh, 100%. Yeah, I absolutely. Well, very well described, well analyzed, and that's exactly what's happening. And that's really, why is the Dow almost back to even? Well, it's because of the value, and mostly because of energy.
Right,
energy stocks are up a ton.
One thing that I'd love to sort of pick your brain on is, looking back, we should do actually, because it's December, we should do some sort of retrospective on the year at some point and just talk about, maybe next week we can do like best and kind of worst takes. This has been one of those years that it almost feels like a decade has happened. And, there's like, what's that phrase where there'll be decades where nothing happens and then one.
Yeah. And then months where decades happen.
Yeah.
Or years where decades happen.
Yeah. I would like to get I know SBF and FTX has sort of been analyzed to death at this point, but I don't know if you saw the venture portfolio for Alameda got released. So we got line item detail into some $5.5 billion worth of investments that Alameda made. I don't know if you had any. I can actually pull it up because I think it got released on Twitter. So I can see
it's amazing. And part of the problem is there's half of it is venture. The other half is not venture, right? The other half is literally money laundering. I mean, no hiding it. No, I mean, it's literally shell companies set up. They're a website. SBF is 100% owner, which is just crazy. And so like 200-ish companies aren't companies, right? They're just fake. Now, the other half, actually, there's some venture capital investments. They invest in a whole bunch of funds, not ours. But, and like I said, I've never met the guy. And then they did do some deals, but, and look, I remember we might have even talked about this. They definitely did little tiny bits in real companies and whole bunches of money in very dodgy stuff.
Can we break some of these down? I mean, to your point, I think some of these acquisitions range from, some of these investments range from, on one hand over here, sort of silly investments to some entries here that are sort of unexplainable and look like they could be grift potentially.
Oh, for sure.
And then there's actually kind of there's actually kind of another smaller bucket, which actually might be interesting for investors, right? In terms of, because maybe these are just going to be overvalued, but they could be, they'll have to basically work through this investment that they got from Alameda at a crazy valuation, but they could be good over a period of time, right? Anchorage is a real good company, right? So, okay, so let's talk about some of these. Genesis Digital Assets. So this was one of the largest miners. So we've got 3 different line items here. There was a $250 million injection in February of 2022, then another $250 million in April of 2022. Oh, sorry. The initial one was $550 million in January of 2022. So from January to April of 2022, am I reading this right? Over $1 billion was invested in a miner. Can you explain that? I haven't heard anyone dig into that. It's an enormous investment. It doesn't seem to fit the mandate for Alameda at all.
Well, for sure it doesn't. And I can't explain it because I know how hard it is to get miners, the actual physical machines, because we work with, plenty of mining companies. We actually never invested in any of them, but we've looked at a ton of them because I could never make it work.
It's hard for VC.
After depreciation. Everybody's like, well, you get your money back in 18 months. I'm like, okay, but then what do I do with these rigs? And like, oh, well, we'll just sell them. And yeah, but they go to zero. I mean, they literally go to zero because they get antiquated by new technology. So I could never figure out how to make it work. But look, mining is really, really important, obviously, particularly for Bitcoin. But I struggle to understand this, especially when you look at the value of the public miners, Marathon and Iris and Core Scientific. They didn't spend this much money. They spent hundreds of millions rather than tens of millions. It's hard to put $10 million to work and get miners. So I think this is not real. That my opinion would be this is not real.
I have so Genesis, I haven't heard anyone explain that, but I agree with you. There's the capital allocation problem. How can you actually take $1 billion and put it to work? But also Sam is pretty, he was famous for this even at the time, but now this has been overly analyzed to death. Very, very healthy risk appetite, right? Or arguably far too healthy. Mining does not really fit the bill for that. So why that would take up 20% of the entire venture portfolio for Alameda, I can't really wrap my head around either. So I think that some enterprising journalist maybe at Blockworks wants to dig in. I think that'd be very interesting.
Well, and here, again, this is supposition, not assertion. But one of the things that's really clear about FTX is the circular nature of so many of their transactions.
Yeah, I think that's a really good point.
Right. And so Sam makes an investment in Sequoia, and Sequoia turns around and makes an equivalent investment in FTX. These guys make an investment in Genesis. Now, again, I don't know that Genesis Digital Assets is part of Genesis Trading and Genesis, DCG Empire, but I'm going to make that assumption. And then Genesis lends FTX a whole bunch of money, with bees. And so is this, here, I'll give you money to lend me back, but there's no money. This is the part that just boggles my mind.
Yeah.
Is these guys gave people, right? They gave Voyager money. They gave BlockFi money. They gave these guys, they gave people money that wasn't real. And I'm like, but how did that happen? How did they get a bank or somebody to transfer money? And the only thing I can come up with is they never sent money. In fact, Chanos was tweeting about this yesterday. Did they just send SBF bucks or FTT? So were they literally giving people fake money and then claiming the asset on their books? And that's the part I just don't know that we're going to find out anytime soon.
There was a little while ago, the reason why I, with sort of clarity now, right, of everything that's unfolded over the last 12 months, it seems very silly, but there was an immense pressure about 12 months ago to accept payment in native tokens. And many entities that had a native token would say something to the effect of, okay, we're willing to pay, $100,000 for service XYZ, but if you accept our native token, we'll pay $250,000.
Yes. Yeah.
So what was the incentive for you? You said in your head, okay, well, I mean, I could, even if it moves 10% or 20%, I can just take it and immediately flip it.
Yep. But Michael, that is how M&A has been done forever and ever, in that there was a cash price. And then there's, well, if you take our stock, we may give you more, because, and Cisco did this relentlessly. But the difference is Cisco equity actually was a claim on equity.
Yeah.
Right. You owned part. Now the pool got bigger and they issued more stock and they diluted everybody. And and then it all went in the toilet because they were lying about their inventory. So, they committed some fraud. But maybe it wasn't fraud. Maybe it was just, bad accounting, whatever. But the point here is creating a token out of thin air that's a utility token. Now, maybe there was some linkage of FTT to ownership of cash flows in FTX, but I don't think so. I mean, that was always the premise, right? Was that these exchange tokens would somehow give you a share of cash flow. So it's not really equity, but I don't think that was the case. I just think it was literally punch a button, print a bunch of more tokens. And here's the crazy part about this is the only way I can make it work is if it really was a Ponzi, which I don't like to use that term, but this kind of works. If you took the FTT and gave it to somebody who actually gave you real cash, right? Then you took that cash and you sent it to the next company. Okay. Then you printed some more FTT and gave it to that company as collateral for a loan. So it's possible that they, printed 700 million of FTT or $1 billion of FTT and gave it to a lender, Celsius, or maybe let's say Celsius. So he gave it to Celsius, and then Celsius gave him real money. And then they gave the money to Genesis, and, Genesis, went out and actually bought miners. If you could find $1 billion in miners, which I don't think you could, but then my guess is no, they took that money and gave it back to FTX in exchange for FTT. Then they took, again, this is the same money, right? It's the same money that started in Entity One, came to FTX, went to Genesis, comes back to FTX. Then they give it to a bunch of other companies who then maybe they give some to BlockFi, and then they printed more FTT to BlockFi. And so if that was what was going on, then we're going to find out that's how you make $8 billion disappear, because there was never $8 billion. It was the same, it reminds me, there's this story, European traveler comes into the hotel and he says, I'd like to, maybe rent a room, but I'd like to look at it first. And the innkeeper says, oh, sure. Just, put a euro note on the desk here and go look. So he puts this 500 euro note down, and guy goes upstairs, check out the suite, and the innkeeper takes the money, runs out and pays off his debt to the farmer. The farmer takes off his debt to the butcher, and the butcher takes the money and runs and pays off his debt to the farmer. And the farmer takes the money to the house of ill repute and pays off the debt to her. And then she runs back and pays off her debt to the hoteler. He puts the money down, and the guy comes out, says, I didn't like the room, takes his money. The whole town's debt was wiped out with one paper note. And I think that's kind of what was going on here. I think they took the money from company A in exchange for worthless tokens, then gave the money, real money, to somebody for some of these deals, but then issued more worthless tokens to another lender. And I believe this is why it all came crumbling down, because of Luna and Three Arrows and Sam going, oh shit, now that money got vaporized. So now I'm going to pretend to buy the lender so they don't call my loan. Right. If they don't call my loan, then I'm okay. And look,
it'd be chief head irony of ironies. There's speculation out there. This is Kyle Davies and Su Zhu trying to pump this narrative that in fact it was Alameda that shorted. They were the one that broke the peg on UST.
And that's why I said there's no chance, zero chance in my mind, that this guy is the mastermind. No chance, none. And I ask listeners that are listening to this, send me a video, not from the last 2 months where he looks like a complete moron, like seriously, can't speak, can't string sentences together, shaking. And maybe that's all an act. Maybe. Send me a video from before that where he looks intelligent.
Mm.
I want to see a video where this MIT graduate, mastermind, whiz kid, John D. Rockefeller of our age or JP Morgan of our age, someone send me a video where he looks intelligent.
I'll link you one. There was an Invest Like the Best interview that he did about a year ago or something like that. I listened to that interview like 3 times. I actually thought it was a very good first principles explanation of markets, but you know, you and I differ a little bit on this. Where we'll agree. I think this media tour, by the way, you haven't seen SBF on any Blockworks things, right? There's no, oh, hey, we're crypto native, so we'll interview. I'm sick of giving that guy airtime. I don't, at this point, there's nothing to be gained from it. There's no more, oh, we'll get this on the record. He's had enough of that. I don't like, so he's not coming on. I think it's a kind of a gross dog and pony show at this point, and I just think people should stop giving him their time and it's engagement farming.
He's making his case to the court of public opinion. And, you know, I think we talked about last week, there are people, there are grandmothers who've said, oh, that poor young man. You know, he's really being, you know, like, what are you talking about?
No, I'm aware. I was at Thanksgiving Thanksgiving this year. This happened to me. I was sitting around this dinner table with my friend and his parents and their, you know, and people were skewed a little bit older. Oh, I heard it kind of got away from him. And I was like, no, that is not what happened. No. That is not what happened.
No. So look at the piece in the Boston Herald or whatever the other day about Caroline. Oh, she was just this,
oh my God,
this wonder kid, you know, kindergarten math whiz. And
to be honest, I can't
even
get mad about that. I laughed at that. I laughed when I saw that. For those of you who didn't see this, maybe we can, it was a headline of the Boston Globe. Caroline Ellison was destined for greatness, something to that.
Yes, destined for greatness.
And then she got into crypto. But come on, I mean, you have to laugh at that. That's hysterical.
Because crypto makes us all evil. Like I was a really nice guy. I had dark hair, and then I got into crypto, and now I got white hair and I got wrinkles.
What's going on, guys? Want to give a quick shout out to this episode's sponsor, Curve. They are the one-stop shop credit cards that helps you take control of your personal finances. Here's the reason that I personally love this company. These guys are all about helping you manage and maximize your personal cash flow. We have been talking for the last couple months about everything that the Fed is doing with raising interest rates. Obviously, no one's got a crystal ball. This is not financial advice, but I think it makes sense more than ever now for companies to be managing their cash flow and for you as an individual to be managing your personal cash flow as well. Curve makes it super, super easy to do that. Even I can do it as the technological Philistine. They aggregate all of your spending information in one place. They make it super easy to plan. But they actually go one step further than that. They have a very cool feature called Go Back in Time, which allows you to switch payments from one card to another. So if you have an unexpected expense crop up, boom, you can move that over to your credit card, free up some cash. Or maybe you learned too late that you could have earned more rewards by spending on a different card. Boom, Curve has you covered there too. And the last thing that I'll say is, if you click the link at the bottom of this episode, you'll get $20 in Curve cash, but you'll only get that if you click the vanity link at the bottom of this episode. Plus, that gives me the credit as well. So thank you, Curve. I appreciate you caring about cash flow. Guys, click the link at the bottom of this episode. Tell them I sent you.
Yeah, I don't know if you've done the Lensa thing. You know, that's the thing. Everyone's doing it. So I said, fine, I'll do it. And all I got to say is about half of the avatars that the AI did are recognizable. They look like me. In fact, a couple of them actually look a lot like me. But the other half, this thing needs work. I mean, there were a whole bunch of them where the aspect ratio was wrong. So it ain't perfect. But the one thing, there was a thread, this couple friends of mine were saying, oh, but it makes everybody look young and it sexualizes women. I'm like, I didn't get young or sexualized. I just look old because I got these deep creases in my avatar. I'm like, if you're going to do an AI, how about clean me up a little bit? Come on.
There's been different periods of time. You can actually, not to super nerd out on you here, but you can go back and look at, like, there are all those busts of like Roman senators and everything. There are different periods of time where, one, you wanted to emphasize the youth, right? And that was kind of like the Caesar age. But then there was the reaction to that, like late Republic kind of, you wanted age and wisdom, and they actually emphasized all the creases. And they wanted to do that.
So that's, you are so perfect. So look at this.
Yeah.
And I tweet about this one. It's like, I had no idea that Harrison Ford was my father. I mean, but there's the bust, right? And I'm like,
yeah, that looks Harrison Ford-esque, man. You look like an
hilarious.
older, more refined Harrison Ford.
It's
that's
hilarious.
Not a bad thing.
I'm like, you know what?
I'll take that comparison. Yeah, I'll take that all day. Okay, I'd love to get your opinion on something, which was proof of reserves. So proof of reserves is getting in all the headlines this week. Binance released sort of a preliminary version of it. I wanna emphasize why this is. Well, why is it important? Obviously, because some of these assets, especially some of the more offshore ones that are less regulated, have proven to not be particularly discretionary about what they're doing with their users' funds. So this is proof of reserves. It kind of first came to light. I mean, folks like Nick Carter have been talking about this for a long period of time. But I want to emphasize that what most people, I think of as proof of reserves, people are actually talking about proof of assets. Proof of reserves is proof of assets plus proof of liabilities. The proof of liabilities is much harder. So it's very easy for exchanges to say, hey, point to a wallet and say, these are my Bitcoins. Okay, that's great. First of all, that's great. Well, first of all, we need an auditor to make sure that you actually own and control the private keys for that. But second of all, what are the liabilities that correspond to that group of assets? Because if you're showing me a wallet with $5 billion worth of Bitcoin, but I've got $10 billion worth of customer deposits, that's a big problem. So the asset side is relatively easy, right? You need to be able to point to these wallets, prove to an auditor that you control the private keys on a relatively updated basis. The trick is proving liabilities. So actually, I think the group that pioneered a theory for this was BitMEX originally. And they're trying to solve this problem where, you don't want to display too much user data, right? Or you don't want to make everything public because then there's privacy issues there. Mm-hmm. But they sort of came up with this useful structure where they have the total amount of liabilities at the top of a Merkle tree structure. And then they reveal just enough information, personally identifiable information in different leaves on the Merkle tree. So what you can do as a user is you can, using that bit of data that they give you, you can actually test to see, okay, here's the overall pool of liabilities, right? Customer deposits on the exchange. Are my customer deposits are my deposits on the exchange included in that overall number? And theoretically, you don't need everyone to test that because not everyone's going to. But if enough people verify that, then you can be pretty certain that all the customer liabilities, deposits are accounted for. Yeah. Now, the limitations of that are you can't tell if there's an off-chain contract where the exchange is using that for collateral for something else, right? Yep. So there are very hard limitations on it. But with the use of auditing and some sort of structure like that, that'd be great. Kraken has done a really good job of shout out to Jesse Powell. Binance announced their proof of reserves earlier this week. There were some issues. Were some ish. So here were some of the problems, right? They equated Bitcoin with BTC and BTCB. And those are Binance that are basically Bitcoins that are wrapped on Binance Smart Chain and on Ethereum. Binance is the issuer of both of those things. There's obviously an additional layer of risk. Those should not be held at par. BTC does not equal one BTC, right? As we know. Yep. The other thing is they include negative account balances, and that affects things. So on a spot margin exchange, basically, if you deposit some collateral, the exchange basically gives you a loan to trade with more than you've put up. That shows in your account as a negative account balance. Mm-hmm. That would actually be an asset to the exchange. Those need to be excluded from any calculation of proof of assets and liabilities. So there were still some pretty big problems, I would say. But CZ has said he's working to move towards this. I think Jesse had a pretty good call out on it. I don't know what you thought about all of this, but I would love to see exchanges move towards this acceptance model.
For sure, we need self-regulation, or we're going to get real regulation.
Right.
And the real regulation, look, regulation isn't bad. We should have rules and we should have standards. And it's hard in a borderless world, like whose jurisdiction are you in and who has responsibility. But at the end of the day, if we don't give people trust in the system, people are going to stop using it. And we're seeing that, right? We're seeing volumes just collapse, and we're seeing money flood off exchange back into cold storage, you know, and I'm a little happy for this part because, you know, we're investors in Ledger, and now not as big as some of our other investments, but you know, a meaningful investment.
Yeah.
And, you know, they had their best sales month ever last month.
Sure. Yeah, I'm sure.
And, you know, their new stacks, you want to talk about an amazing.
Oh my God. I tweeted this out, but the new design that they have, it's the designer of the iPod, right? Tony something, Tony Fadal or something.
Yep.
I've never looked at something in crypto and been like, I want that.
I want it.
I was like, that just looks cool. I want that thing. I thought that was wow.
It is the iPhone moment for Web3. It is
very cool.
And
it's super cool.
And people are like, no. And we've talked about this, right? Is Apple keeps saying, well, we have this enclave and we could air gap and we could have the heart, like, then do it, right? Because I'm only carrying one device. I'm not going to carry both. And what I'm hoping, and what I think this is an HSM that is super hard encrypted, can then take, you know, you can put a camera's not that hard. You can get a camera and you can put it in there. And that's kind of what I use my screen. So I want to be able to switch over to, you know, Wi-Fi and the internet, but that shouldn't be that hard. And now the question is, can you do both on a single device and still be secure? And that's just beyond my technical expertise, but someone's going to figure it out. And if Ledger has done that with this device, which looks like it can, I mean, screen's big enough to actually see stuff. Epic. It's an epic moment.
Yeah, I would agree with you on that. So props to them. By the way, that's like a big risk. That's a big get to get Tony to do that. So props to Ledger for getting that
look,
done.
Pascal, and look, people haven't heard this guy. I mean, we have our little tiny podcast, not nearly as successful as your podcast, but called Digital Currents. And we interviewed Pascal. And look, this is the best hour of my week every week. But that hour and 20 minutes I spent with Pascal is the best podcast I've ever been associated with. I mean, again, it was just I wanted to quit my job and go work for the guy. I mean, he's just so inspirational. I mean, a college dropout and, you know, school of hard knocks and just persistence and resilience and funny and a philosopher. I mean, and maybe I'm just biased to people who understand history and philosophy like you and Pascal. But it was awesome. I mean, he's amazing.
Yeah, he really is. He's an inspiration. He's been there early. I've got one. You know, I've been developing this theory, Mark, that I want to run by you. Maybe we can sort of riff on that, you know, into the end of the show. But one thing that I'm starting to wonder about is if we need some sort of Overton window to shift in order for crypto to succeed. And I think the Overton window that I think people need to look through the lens of is, instead of optimizing for efficiency, they need to be optimizing for resiliency. And what I mean by that is, if you want to compete, you know, I see all these things trying to compete on the battleground of capital efficiency. And I get that, right? Like, you want to be able to, if you have assets, you want to make them as efficient as possible, yada, yada. I find it very hard. It's very hard to compete against the legacy system that we have of one big central authority that has basically unlimited power in the financial system, and they can go and do anything they want. That's the most efficient system you could dream of, right? But what I think we're building here with Bitcoin and decentralized finance and the entire crypto base layer infrastructure is a system that's ultimately more resilient, both to centralized corruption, but also just to, you know, the different big players that want to put their fingers on the scale. Because if we were trying to just build efficient financial products, we should do it all from one database where someone has, you know, immediate authority.
Yeah, but we can, and we can get the decentralized benefit. But we have to build the safety nets and the support systems that allow for people to have that trust. Remember, what we're trying to do is replace trust with truth.
Right.
Okay? And that's what the tech does, right? That's what a blockchain does. But what it doesn't do is it doesn't give us this resilience that you talk about in the face of a loss of confidence. So even though we can know that it's truth, unless someone is committing fraud. But this wasn't fraud on crypto, right? Crypto didn't fail. Everyone's like, oh, this is a crypto failure. No, this was not a crypto failure. This was a banking failure.
Mm-hmm.
And banks have failed in this same way for centuries. Is bad people do bad things and cook the books or steal. And so this wasn't stolen from the ledger. It wasn't. And so for me, let's have this insurance layer that would allow us to operate in this system with the comfort that if a bad player does a bad thing, that we can be taken care of, right? Yeah. Banking system, La Jolla Savings, bad people do bad things, goes down the tubes. Okay. 3% of total banking assets in this country wiped out. And what happens? FDIC comes in, makes everybody whole. We go in, put in new equity, and everything's great. Well, why did that happen? Well, because there was this insurance network. So why? And to me, we don't need a centralized authority. We can do it decentralized. Why can't there be contracts that every transaction, just a little tax, and it goes into the insurance pool? And instead of the insurance like we do it now, where there's insurance in the UK and insurance in the US and insurance in Panama, insurance in Panama, but insurance and all these pools are small. Let's have one giant pool, like a global pool, because that's more efficient. And let's have it be auditable and public and on a permanent immutable ledger. And then when the inevitable happens, right? When there is a loss, people can make claims. And I just think insurance is the thing that's missing in my mind. It's, we've invested in a couple insurance companies and that, think about any business, right? No one would buy a house if you couldn't insure it. No one would buy a car if you couldn't insure it. No one would, operate a business if you couldn't insure it. So we built these financial institutions that were replicants of banks and savings and loans, but we had no insurance. It doesn't make any sense. So,
yeah, the insurance though is a tough business because insurance is basically there if one individual person fails, right? That's the business model. Oh, hey, I've got this slew of 1 million people, and 3 or 5 or 10 or whatever of that million people ends up needing a large payout. Yep. Insurance totally fails when the entire system needs a bailout or there's a major, right? We went through this actually during COVID when you have business interruption insurance. Okay. There's a global pandemic and the government is ordered to shut down the business. We're not going to cover that. Why?
Right.
Not because it's not included in the coverage, but because if they paid out everyone's claim, then they would go out of business as well, right? They're not. That's why you have reinsurance, and then there's a larger insurance market that insures the insurers, and then that ultimately all kicks up to the government. And but that's the whole circular problem, which is that everything kicks up to the government. When you can't solve something, everything just gets kicked up to the government, and the government says,
they just print more money to get out of it. And that is I think this is really interesting because it's almost a philosophical problem. We talk about this deflationary currency and why it's so great. Okay.
Yeah, I know.
But remember,
I'm with you.
The inflationary part of the currency, particularly the world reserve currency, allows for the bailout of these exogenous, unexpected, unanticipated events. And yes, it has ramifications. I mean, it means, what I read yesterday, 69% of people reported having problems paying for groceries. 69%. I mean, I'm sure that number's not right, but it's probably in the ballpark.
Yeah.
That's a frightening thought. And why is that? Well, it's because they created too much money to bail out the system in, the self-imposed lockdown nonsense, disaster. And, it's kind of like we're seeing it in China, right? China, lockdown, zero COVID. Okay. Economy, like down. And now they're like, well, okay, it's down far enough that if it goes down any further, like we're gonna have really bad problems.
Mm-hmm.
So let's start unleashing and let's get rebuilding. But because the government can print at their leisure enough renminbi to facilitate that.
Yeah, it's an interesting problem. I continue to think that the most useful lens to look at crypto, everything, Bitcoin and crypto included, is a reaction to a system that has gone far too much. The pendulum has swung far too much in one direction. So if you think about the fiat system, right, there's always a tension in between spenders and savers. And I probably fall on the side of, on the margin, you want people to be more spenders than savers. I think it's better for a society, because if the marginal dollar is going into spending at a business, then it's that much easier if you want to create a business, and business creation and markets are how we move our society forward, right? That's how we track that. So we want people doing a little bit more spending than saving. But we have taken that just way too far. We've seriously abused that. And and if you put yourself in the position of someone who, is working in a minimum wage job, and they don't have any access to just be able to protect their purchasing power, and the only thing you can do is put it in these crazy stocks. That is
no, yeah,
it's a bad situation,
and it goes to, it's going to get worse, because we thought we were going to talk about Chat GPT and GPT and AI. Well, that's going to make this way worse.
Oh my God.
Right? If suddenly all of these jobs are done by the AI, whether it's graphic artists, or whether it's copywriters, or whether it's researchers, or, whether it's novelists, or whatever, then those people, the nirvana thing is, oh, well, then we have more time to be creative and okay, sure. And that's the whole thing about, if your money isn't devaluing and could actually appreciate, you're freed from, slavery of income to be more creative. Well, okay, but if I'm going to ideate and create, but all the business models are being done by the AI, well, and so I read this thing and it was okay. I mean, it said, well, then we'll get to the transcendent state, which is what humans should be anyway, where we sit around and meditate all day. I'm like,
I also,
okay. I mean, yes.
Mark.
Look, I get it. That would be awesome for a couple days, but
yeah.
I like
I'm with you on that. I'm with you on that. I'm sorry. I don't think that 100,000 years of human DNA is going to be overwritten, and suddenly we're going to be cool with sitting around and being happy with everything. It doesn't mesh with my fundamental. And look, the Steelman counter argument to this is, you're in a box. This is the way it's always been. You're incapable, once you're in the box, of seeing on the outside, right? But I just don't think so.
Look, if all we're meant to do is entertain one another, okay. Now we don't have to make stuff, right? Because the machines will make it. Okay. And look, you and I we're making entertainment right now, and we're trying to inform and enlighten and educate too. But at the end of the day, this is a form of entertainment. And so we're investing an hour of our time, and other people then invest. And we're very grateful for everybody who does join us every Saturday. But I don't know. I like the idea of making stuff. I like what I do. I like investing in founders that make new businesses. But if the machine's going to do that for me, I don't know. I could ride my mountain bike a little bit. I could, meditate a little bit, but I don't know. And here's the one thing, this is what I've really been struggling with is, you had this Lensa thing and all these pictures are out there, and it's like, well, that's wrong. And that has no value because it wasn't created by a human. Like, just think about this for a second.
Yeah.
So if it comes out of my brain through my fingers, why is that superior coming out of an electronic brain? I don't know that I necessarily agree with that, because my brain is equally mysterious as this AI, right? I mean, I know, like Jackson Pollock. Some people look at it and say, "Oh, it's beautiful." Okay, I can have an AI, generative AI, create almost the exact same thing. People say, "Oh, the Pollock is worth more." Why? Just because it came from his hand versus this generative AI algorithm, why is that better? I don't know. If the response is the same, right? The physical, visceral response to a piece of art is the same, why does it matter who created it? I don't know. And I mean, this, I'm gonna be sitting with this for a while and thinking about it. And if a book is written by a human versus a bot, but I still love the book and I love the story, why is it less good?
Oh, I'm not even sure I really need to think about that. I don't think it's any better or worse. Okay. I don't think it's impacted if it was done by a human or not. I think probably, in fact, the exact opposite of that. I think people will be fascinated when AIs are actually capable of writing full-length novels. People are going to be, there'll be this whole new quality to it, because it's like it came from the ether. Where did this even come from? It came from.
But your brain is the ether. That's the part that's so weird.
Yeah, it's just.
If you think
cool.
about,
I think it'll be cool.
Actually, do this exercise. Kind of almost write down, but you don't even have to write down. You just have to sit with yourself for a few minutes and watch the thoughts. Like, watch how random, and like one will be like a historical thing that happened to you, and then one will be an idea, and then one will be a butterfly flies by, and then I mean, it's wild. And you're like, there's no way you could code that.
Yeah.
Right.
So
what to me is the magic of whether AI can do this is, can it have the randomness of human experience? Because like, we didn't plan to talk about some of the things that we talked about today. No. It just happened organically. And one of the things that we planned to talk about, we didn't spend that much time on. And it's that randomness that I think is so wonderful, yet so perplexing.
Do you 2 minutes on ChatGPT? I mean, there are sort of these two arguments about it, which is, one, this is unbelievable. First of all, in terms of achieving 1 million users, it did that. I didn't look. It's like a week or something like that, right? So a lot of people are using this. In terms of, it seems like the flexibility and the quality of the response is extremely high, actually, on ChatGPT. So to your point, I mean, this is a bit of a light bulb moment for me, I have to admit, on Google. Up until recently, I'd always thought Google was very good. Now, if you Google something, the first 7 results are ads. It's all been SEO optimized. Useless. I got to be honest, it's kind of useless. I used to feel like Google was magic. I think the quality, if we're all looking at it pretty honestly, is degraded quite a bit. So on the one hand, sometimes you type into this question to ChatGPT, you get a better response than you probably would from Google. So that's the Steelman argument. People are saying blah, blah, blah. Now, the Steelman argument for why it might not be as great is, one, people are going to realize that this is almost too good and too powerful, and they're not going to allow it to crawl their data, right? So then you can sort of see this future where there are these silos with, some sort of AI thing, and then, but really the ultimate, like, data is the new oil, right? So people, there was a pretty interesting idea I heard where maybe you buy up hospital systems because you get proprietary bits of medical data that you can run your own AI sort of simulations on, and that would be very cool. And then the other thing is, it kind of makes some basic mistakes as well. So where do you fall on the whole? This is
the genius of Google is that they indexed, right? They created a website with the answers to all the questions. So when you're typing, by the time you're done typing the question, it's already sent you where it knows you want to go.
Yeah.
Okay. And if you ask a new question, if you're actually smart enough to ask a new question, then it has to go find the data and create a new website. Okay, that's amazing. But that's facts, right? Who's the 46th president? Okay, that's a fact. Where is Yosemite located? That's a fact. If you Google, how do I design a system to detect cheating in high school kids writing papers using ChatGPT, GPT? ooh, it's going to struggle with that one because that's not a fact, right? That's kind of like intuitive. And when the person asked that to ChatGPT, the answer was amazing. The answer was give them problems that are open-ended, not simple just prompts to write an essay, and have them do collaborative work instead of individual papers. Like, damn, that's a good answer.
That is wow.
That's a good answer. And so that
wow.
Intuition, but that's the human part. We think of human, but it's really just the electronic synapses of the brain. And think about it. What is a computer? A computer is simply an electronic system that does tasks faster. So now we're training it, to your point on the data, to make these inferences faster. Now, if you restrict the data, it's not going to be as effective, but it then will start creating its own data, right? By thinking, literally thinking, and repositing that data, and then it will scrub that data. So I think it can overcome some of that, but ultimately, there's a big difference between fact questions, and like problem questions or idea questions.
Yeah.
Somebody said, well, it perfectly coded, some loop to do something, to draw a picture.
Yeah.
Okay, fine. Python coding, I can't do it, but it's pretty rules based, and yeah, fine. It's better for that.
Yeah.
But again, this goes back to what you and I talked about. Questions are more important than answers.
Mm-hmm.
So formulating the right question is the key. And what you've seen with the chat thing is if you ask a question a certain way, you get one outcome. If you insert one or two other words, you get a different outcome. And like there was one, and this one made me a little bit mad. It was something about why should I vote Democratic? And the response was, well, I can't tell you to vote one way. You have to look at all things. And it did the politically correct, but correct answer was make your own decision.
Yeah.
But then it said something about gay marriage. I can't remember the exact question. And the thing was, well, all marriage is just a contract between two people, and anyone should have the right. And the guy was like, see, this is liberal and it's biased. I'm like, what are you talking about? That is a factual statement. All people, maybe it's not a factual statement, but that is not a biased statement to say that the contract of marriage is a contract between two people, and it can be any two people. That's not a liberal. And so it was the person putting this lib label and saying that the system was biased. Like, no, that's not biased. That's the meta, maybe that's the wrong word, but that's the consensus of the data is that a marriage contract is this, and the people are people, and therefore anyone can be married. Now, if you want to say no, it was written man and woman. Okay, maybe it was written that way, but we can change our mind, right? We're allowed to change our mind.
Yeah.
So,
I got this whole arguing, and you sort of saw it. I know we got to wrap up here in a second, but this whole arguing, even over the Twitter files and all that stuff, everything is just this battle in between conservatives and liberals and everyone. I don't know. That's not what I think. I don't know. I'm exhausted by it. I'm just exhausted by it.
It shouldn't define you, right?
Yeah, I agree.
Your views on certain things shouldn't define you. Now, they should be part of you, and you should have confidence if, capital I, capital F is my new favorite line, capital I, capital F, if you've actually spent time discerning your own views.
That's a good, I agree with that.
And this comes from William Deresiewicz, wrote this piece, Solitude and Leadership, and what he talks about. And then he wrote a book, The Excellent Sheep, and all this great stuff. He's an amazing writer. And if you haven't read Solitude and Leadership, read it. It's the best 6-7 pages.
I actually don't even know the author. Who is this?
William Deresiewicz. He's amazing. He's amazing. And basically what he says is if I ask you a question, the first thing out of your mouth will be someone else's thought. You'll be parroting back what you heard, because rarely what do we do is take in all this stuff and say, okay, I believe X. I believe a marriage contract is between two people and it could be any people. Do I believe that? Or was I told that? Have I actually thought about that? Have I thought about what does it mean? What is the purpose of marriage? What if I've actually sat down and thought about it, then it's my thought. It's my belief. But most of us don't spend the time to discern. And we just take either what our parents give us or what the media gives us or what the government gives us or what our friend gives us. I'm like, yeah, I like that too. And that's lazy. And what we need to do, but you got to actually get off social media and you got to get, and sit with yourself and actually think and spend time. And his whole point is solitude is what we all need. Not to be alone all the time, but periodic bouts sometimes where you are with yourself. Or you and I can have solitude. Like this is solitude. Every week we get together for an hour and we have these deep conversations about cool stuff. That is solitude. That is what a true friend is, right? Someone that you can talk about stuff in an open way. You can disagree, you can agree, you can, and you listen to each other and you're trying to dialogue and debate in search of truth. So solitude can be a conversation with yourself. It can be a conversation with another person, but as long as you're learning and as long as you're updating your belief stack, that's the whole point.
There's actually good biological reason why people, the causal arrows, most people think they form an opinion by taking all these building blocks and then coming up to the conclusion, when actually you have an emotional reaction to something, then you justify. That's how most people make decisions.
Exactly.
You've got two systems in your brain. You've got your prefrontal cortex and you've got your limbic system. Limbic is the emotional, reactive sort of part of your brain. Your prefrontal cortex is your higher functioning. And the limbic system, it was developed older. If I see bear, I run, right? It's immediate, right? It has to be the thing that reacts first. That's why when sometimes you're in an argument, you feel yourself getting agitated before you even know why. Have you ever been in a situation where someone's saying something to you and you just feel it like bubbling up? You're like, I'm so mad right now. It hasn't even registered in your brain why you're mad, but the other part of your brain, I'm pointing back here because it's sort of located back there.
No, okay. It's the fight or flight. And, and that urge to run, then when it gets up here, you say, nope, don't run, put on tennis shoes, then run. Because you don't have to outrun the bear, you just have to outrun your friend.
Yeah. There's a cool psych experiment where if you do see a bear, let me do a little research on this because I have to remember, but it was huge. It changed the way I thought about a lot of stuff. Mark, we've gone over time here, but
I know
it's always tough to end it. Yeah, I know. Because I enjoy these conversations.
But look, love conversation. I love the fact that we went a little off piste today. Since it's almost ski season. Yeah. And a little tree skiing. Yeah. But wish everybody a good week, and we'll do our year-end review next week.
We shall, my friend. We shall. All right. Good luck with building of the home and everything.
Yes. So, hopefully I won't smash my thumb with the hammer or cut a finger off or something.
Please, Lord, be careful. Yeah, Lord, be careful. All right. Mark, best hour of my week, my friend. I'll see you next week. All right.